US stock market has been content to rally to new highs with many stocks going to the moon, including most of our AI tech giants, a rally that I have been distributing into to the extent that I have now sold 80% of my holdings in the top 6 AI stocks in my portfolio, some of which I've been accumulating for over a decade, i.e. Microsoft. The primary objective of this analysis is to determine where we stand in terms of the top. After all bull markets eventually do top, either ending with a crash 1987 style or a bear market like 2000 and 2007. So what to hold and what to sell is the question I am asking myself, with a view to riding out a potential bear market or crash, where this analysis deploys a new automated metric of individual stock selling levels so that one better knows where one stands in terms of one's portfolio, all in just one table. After all, the risk we all fear is that of a 2000 style collapse that sends stocks lower for the next 20 years. Remember, that bear market bottomed with an 85% collapse for tech stocks. Yes, one could say that the likes of Amazon, Microsoft, Apple had become dirt cheap, but that would have been a very painful and prolonged discounting event. So a case of balancing the risks of letting some stocks ride whilst cashing in those that will pay a heavy price for their over exuberance, all whilst being aware of the AI megatrend trending along in the background. And we have the likes of AMD going to the moon. Yes, in hindsight we can all wish we had bought more. I came close to mid-May to buying more, but at that time was fully invested and thought it unwise to take on even more risk on. But I and my patrons have had plenty of opportunities to buy AMD all the way from March 2020 lows right up until my analysis of 10th of May at a price of $78 or better. That AMD traded down to several times, so I will give AMD extra attention in this analysis. And this video is excerpted from my recent extensive analysis that compares the current stock market valuation against the 2000 bubble peak, when we had the likes of CISCO, Intel and Microsoft riding high, and look at how they have fared since. For instance, CISCO was the numero uno stock of the 2000 bubble peak, destined to double in price. And what did CISCO do? It fell by 90%. So this extensive analysis takes a look at where we stand. Are we about to repeat 2000 or similar? Well, you'll find out in my extensive analysis that has first been made available to patrons who support my work. So do consider becoming a patron by supporting my work for just $3 per month. That is soon set to rise to $4 per month. So you can lock it in now for $3 before the price hike. Stock market bubble valuations 2000 vs 2021. How to quickly know if a stock is overvalued or undervalued. Simply divide the annual earnings by the price and you get a trailing price / earnings ratio. It's far from being perfect, hence why I have long since progressed to what I call the EC ratio, or expensive / cheap ratio, a formula used to better determine if a stock is expensive or cheap, i.e. EC, based on 15 metrics that also includes the price earnings ratio. Nevertheless, I still use the P ratio when referring to stocks because I generate the EC ratio only for a handful of stocks. Maybe one day I'll get around to writing a web application that automatically generates it for any stock and makes the results available to patrons. So how do today's tech giant crap stocks compare to those of March 2000 at the peak of the Nasdaq.com bubble? Firstly, This table shows how the giant megatrend corps of the dot-com era have fared over the past 21 years. As you can see, Microsoft has performed the best. After all, it is one of the FANGs. It's actually up 290% in terms of market cap. CISCO 50% down, Intel 50% plus down, Oracle treading water, and IBM a good 40% down. Microsoft's stock price in March 2000 was trading at $120 on earnings multiple of 56, as the stock price was in a race to become the world's first $1 trillion market cap stock. Set this against today's price of $289 and a multiple of 36, coupled with an EC score of 71. So whilst Microsoft today is not exactly cheap, neither has it reached its 2000 bubble valuation. For that, Microsoft will be trading at $450 per share. And before one considers holders having been invested in a winner that survived the dot-com crash, bear in mind that the chart shows that Microsoft, allowing for stock splits, would only have cleared its dot-com high during 2017. That is 17 years. And during that time, one would have seen the value of one's investment fall to a low of just 25% of the stock's trading high. Stock market FOMO hit September brick wall. Dow 2021 trend forecast current state. My latest comprehensive analysis of the stock market has just been posted to Patreon. A full spectrum analysis that concludes in a detailed trend forecast into the end of 2021 and then continues all the way into 2022 with indications for what to expect even for the remainder of 2022. Analysis that had me dig deep to clear the mists of time, all the way to deep analysis of the seasonal trends on a scale that you will not see anywhere else. From the usual seasonal analysis that's expanded on multiple time frames to the new short-term seasonal trend and the presidential cycle, best time of year to invest in stocks, and a 2022 seasonal investing pattern, and then putting it all together into a final stock market trend forecast, and then coverage of AI stocks and my buying plan, as well as the high risk stocks portfolio. And then we take a look at Afghanistan, China, the comprehensive analysis that took me a good 2 weeks to do this analysis. And again, for immediate first access to all of my analysis and trend forecast, do consider becoming a patron by supporting my work for just $3 per month, due to increase to $4. Lock it in now. And here's the schedule of my forthcoming analysis. Silver price trend forecast, stock market trend forecast for September to December, how to get rich, which is 90% complete. This is patrons, exclusive to patrons. It's taken me a good 6-7 months more now, 8 months of hard work on this, and it's no BS, hardcore, telling you exactly how to get rich. Well, what I've learned from my 35-year career in trading, investing, and in business, or what it takes. Straight to the point rules, no BS, no filler, just hardcore. Then we have a UK price trend focus, and I'll update my US house prices and a quick look at Canada and the US dollar and British pound analysis, and finally gold, which I'm not really interested in, but patrons asked for it, so I will look at gold. Silver first and then gold. Silver, since cryptos, I've gone off silver and gold. I have positions in them, but not significant. So, again, for immediate first access to all of my analysis and trend forecasts, then consider becoming a patron by supporting my work for just $3 per month. That is soon set to increase to $4. That's not much. I'm seriously underpricing myself. Some patrons say I should be charging 100 times the quality of analysis you're getting is worth 100 times what I'm charging for it. But you have to remember that I'm coming from the vantage point of giving my analysis away for free, which I did for 15 years on the Market Oracle website. 15 years. And I was only forced to go to patrons because everybody was ripping me off, copying everything, and trying to deal with all these thieves was like playing that, hitting the thing on the head and another one pops up. This point I just gave up. I go, alright, I'll try Patreon. If this doesn't work, then I'm gonna stop publishing my analysis. I'm just gonna trade and invest. But Patreon seems to be working. It's, I'm actually capitalizing on my investment. Remember, I am a capitalist, I'm not a communist. So I have to capitalize on what I give out, so I'm not going to do it. So the Market Oracle website runs at a loss because everybody's ripped it off. There's no ad revenues and whatnot. So that was the way I capitalized on it before. And now I'm capitalizing it through Patreon to some limited degree. At least it covers the cost for Market Oracle and other online activities. So that's good. Anyway, enough of this waffling. See you in the next video. And do consider becoming a patron as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for over 6 months. It's more like a year now. That's what I was saying last year. If you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. I bought a Corcher K7 for £340. Current price on Amazon is $565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.